All right, today we're talking about swing trade targets and how to set them, secrets to setting them. There's a few different ways that I like to go about setting them, and I'm going to share all those ideas with you. First, we're going to go through why it's even important. A lot of people don't even like the idea of targets, they think that they're unimportant. I used to be one of those people. We'll also talk about technical targets, historical insights into setting targets, and using a results based approach. But before we get into any of that, make sure that you are taking notes on this live stream. So grab a pen, grab some paper, take notes, and I want to hear the notes that you take. So as you're taking them, make sure that you post them over onto social media, tag me, and I'll read your biggest takeaways. I love seeing that kind of stuff. All right, so let's get into it. Why do targets matter? Right? Sometimes trades don't get to their targets. So why bother setting them? Sometimes trades will go way beyond their target as well. So if we're not going to sell exactly at the target, well, why do we even need targets, right? That used to be my philosophy, and I'll tell you why it changed. The reason why it changed is because targets are integral in the reward to risk ratio. So let's just take a look at a chart and I will show you why targets are important. So let's come over here. I just happen to have a chart up and I'll swing you guys over here on Instagram over to take a look at this chart. Get my calendar out of the way. Okay, so let's just say that we wanted to, I don't know, enter this trade here. And let's say that we already knew that we were going to place our stop below this level over here. Now, if we don't know how far the trade is going to go, then it makes it very difficult to figure out if this trade is worth our time, right? If we are just like, oh yeah, we'll continue to ride the trade to the moon, that's all fine, well and dandy, but how do you know what the reward to risk ratio potential of the trade is? If I think that, let's just say that I'm going to use a historical average, and we'll get deeper into this in a moment. But let's just say that I take a look at my past trades, and my trades tend to go 20%. Right? This is about 20%. Not going to adjust it. So if this goes 20%, then that's my target. Well, is this a good trade? Well, no, right? This wouldn't be a good trade if I was planning to set my stop way down here. Then my reward to risk is only one. So I've got a coin flip to make my money back, right? You wouldn't take that trade. What you want is the trades that are going to give you asymmetric reward to risk. And that's the big reason why, one of the big reasons why I decided that, you know what, targets are useful. And I'm going to start to use targets so that way I could learn more about the reward to risk ratio. And at this point, I factor the reward to risk ratio into my selection criteria. So if the reward to risk isn't enough, I'm not going to take the trade. What's enough? For me, I want at least 2-to-1 reward to risk. That's the bare minimum. Most of the time, I'm looking at trades that have the potential for 3-to-1, 4-to-1, 5-to-1. It's very important. And no, reward to risk is not a goof for this guy over here that's thinks that reward to risk is nonsense. You'll soon learn why. Hope no, maybe I'll change your mind. Maybe I won't. Anyhow, if you stick around, let me know, well, what you think towards the end. So the reason why I'm using it is because it's factoring into that whole reward to risk element. Now, how can we set good targets, right? Because the understanding where to set a target and allowing it to be kind of like a GPS or an address that we're putting in. We want the trade to get there. Does that mean that we're necessarily going to sell at the target? No, that's not the purpose of the target. It's not to just say, okay, I've got my target and I'm going to treat this like I'm playing darts. And if it hits the bullseye, that's the only time that I'm going to get any points. No, that would be very stupid. What we want to do is to have multiple ways to sell out into strength. Well, that's a whole conversation unto itself, but that's not the purpose of the target. The purpose of the target, again, is so that way we know the potential that the trade has. So, how can we figure out what's a good target? There's a few different ways that we can figure out what's a good target. The first, we'll come back over to let's do a trade that I was in. I looked at IO and Q a number of times, but I was never in this one. So why don't we go to a recent trade, SMCI. I was in this trade a couple of times. Um, this was the most recent one over here. So why don't we put this on? Actually, why don't we take a look at AMPH? I think that chart is going to be a little less noisy overall, right? Yeah, this one is a little bit better here. Right, so take off the old notes. So when I was entering AMPH, I was getting in down here, and I set my stop over here. I wanted to see how far this thing could go. So there were a couple of different things that I wanted to look at. The first thing that I'm looking at, from a technical basis, is I'm looking at Fibonacci extensions and retracements. So based on Fibonacci extension, I'm looking at 3618 level, and there's a bunch of different ways that you could set up Fibonacci extensions. The You could use the 3618 level. You could use a 2618 level. Where's the 2618? Over here, 1618. Basically, the 618s are the most popular. And if you notice, that 2618 level is right around where AMPH started to get into some trouble over here and then popped above it a little bit and then fell. Is there some sort of magic to Fibonacci? Not really. It's just that, well, when you have an indicator that tends to be a popular indicator, a lot of people have their eyes on said indicator, and so it tends to be a self-fulfilling prophecy. So that's one of the reasons why I like to look at Fibonacci levels. So this one happened to be around 65. So that's why I'm looking to sell a portion when it's getting there. But that's one of the reasons why. Um, Another thing is that this Fibonacci level is also right around a major number, right? Fives and zeros tend to be major numbers. So that's one of the reasons why I would be looking over there too. Let's see, well, what else do we have on here as far as technical reasons? Well, if I'm going to use 65 as a level, one of the things that I like to do is to see, is this a measured move? So basically, the distance between where I'm getting in to where the target is, taking that and measuring it. So from here to there, doesn't really line up with anything at all. So it's not going to count as a measured move. So the next thing that I would look at is this target, how does this target line up with historical moves? So there's a couple of different ways that we could look at historical moves. We could take a look at how the stock is traded and how it's consolidated, right? So let's take off the fib levels for a second and see, well, how what kind of runs did this stock have? So from this consolidation to up here, it ran 25%. So over here, it ran about 18%. Okay, what else? How far else did it run? From over here, back here to this level, it ran about 15%. So post breakout, the stock tends to run between 15 to 20% or so. So having a target over here that lines up with a fib level that's about 15% makes sense. It's in line with what the stock has historically done. Another way to think about historical moves are to take a look at uh, the top stocks in history, right? And so now it's starting to get into William O'Neill's analysis, and others have done it. I've done this as well. But here's what it is. What it is, you go back in time and take a look at the stocks that have historically performed the best, right? The stocks that or the stocks that you're interested in, whatever the stocks that you're interested in are. Go back in time and look at those types of stocks. Look for the setups that you typically look for. Then see what is the typical move from that base. What O'Neill's work found was that most stocks, when they break out of a primary base, tend to run 20 to 25%. Great. So if I'm looking at a stock like AMPH, right? Go back to this. And I want to use 65 as a target, then it's we already spoke about historical targets. Another great target to use is results-based targets. What's a results-based target? A results-based target is going to be a target based on your past history. So, how far have the trades that you've taken run? That's where journaling comes into play. That's where learning your stats comes into play, because if we want to use reality, right? Like, it's one thing to look at what the stock has done and try to set up all these other technical levels and try to sort of forecast where price might go. We're not going to sell and just wait for price to either hit a target or to hit a stop. That would be stupid. We don't want to be stupid. We want to play smart. The way to play smart is to figure out where price can get to, right? Try to figure out the probabilities of these things and then take a look at our results, because our results are reality. The way that we can measure reality, apparently Siri didn't get understand. Hopefully you guys are understanding. Now, what results-based moves are is taking a look at your prior trades. How far have your prior trades run? Have your prior trades run 5%, 10%, 20%? And I'm not talking about your entire history. What I'm talking about are your most recent trades. Take a look at your past 10 trades. How far have those run? How far have those winners moved? You could use that as part of how you're going to set up a target, because I could take a look at a stock like AMPH, right? Flip this back around. I could take a look at this stock and say, you know what? My most recent winners have run 20%, 30%. And if I'm taking a look at this, then this doesn't match what my recent trades have done. Furthermore, if let's say it was the other way around. Let's say that I wanted to set up a 15% target for this, but I noticed that, oh, my past trades have only moved about 6 or 7%, and then we're getting into this rough, choppy market. Then it wouldn't be a great expectation for me to think, yeah, this is going to get there. It's nice for it to have the potential, but I'm not going to sit around and wait for 15% because there's a technical level on this thing. I'm not going to do it because there's a historical level on this thing. I'm going to trade based off of reality, and reality is our results. Again, you must journal your trades. You must log your trades because that's the only way that you're going to have hard evidence for what your results are. Let's take some questions. Gonna flip through Instagram over here. I see a few people watching on the other platforms, YouTube, Twitter, or should say X, LinkedIn, Facebook. Everybody get your questions in now. If you're over here on Instagram, it's very helpful if you guys use that little question bubble. That makes it easier for me to see. Let's go through some questions here. And yes, this is my funky marshmallow mug. Marshmallow from the Frozen movies. Got it at Disney when we went a couple of years ago. Question from Thanos. What is your entry signal confirmation? Uh, when I'm looking at entries, there's a few different things that I want to look at. Well, I believe we spoke about this on the last live stream. If not, it was a couple of ones before. But what I'm looking for, very similar. I'm looking at multi-time frame analysis. Well, whenever I'm going to look for any kind of an entry, a target, a stop, any of this stuff, I always want there to be multiple confluences around what I'm doing. So let's talk about entries and let's continue to use this chart here in AMPH. So when I'm looking to enter right here, right? So I bought there, I bought there, and I bought there. Now, why would I buy in those two spots? Well, if we go over to the weekly time frame, on this level, you can see that it's lining up pretty well with the weekly chart, right? So it's breaking out of a resistance level on the weekly time frame, and it's breaking out of a resistance level on the daily time frame. But it's also, if we come back over here, you could see that it was tightening up very well down here on the 30-minute time frame as well. And in fact, well, when I got into this one, I believe my stop wasn't down there, but was actually a bit tighter on this trade because when we use multi-time frame analysis in this way, we could spot tighter levels of support, tighter levels of resistance, and it can be extremely helpful. So I was looking at that for the entry, but I'm not just looking at tight areas on the chart. I'm looking for patterns. For me, this particular pattern, I was seeing this as a pullback, right? A lot of things that can fall into the pullback camp, but so it's important to have a definition of what a pullback is for you. So for me, if I'm looking at this and I'm looking at, well, how far did this one pull back? I like to see my pullbacks happen at least 7%. 7% is the minimum. The max is generally around 15% or so. So this one is right in there. This pulled back 8%. This was a leader. It led multiple times. If you see that little SL mark there, that stands for sector leader. So this was a stock that was not only a leader in the market, but was also leading its sector on multiple occasions. So when I'm seeing pullbacks in sector leaders, that has me take notice even more. And so that factored into why I bought over here and why I added to it right over here. You didn't ask this question, but I'll give the answer to, I sold into strength on this day here. I sold 25% of my position right towards the end of the day there, so got out pretty close to the top. And the reason why was because price was about, or the stock was about to report earnings. And it was going to report earnings the following day. So it was getting extended, so I took some off. I allowed the rest to run. The reason why is because I bought down here and I also added down there. So at this point up here, I have a nice cushion. So I'm I'm the type where I'm willing to risk my profits to make more profits. I'm not will If price were down here, then I would have exited because I didn't have profits to risk. It hasn't earned the right to uh, to gamble on earnings. So I'm going to hold through earnings. And then initially, price started to run up and then it reversed and it closed near the low of its days. Now, another thing that I like to look for are danger signals. Danger signals are signs that a trade is weakening. I won't sell based on any one danger signal, but I'll look for the entire weight of evidence for the danger signals that are presenting. On this particular day at the close, there were 12 danger signals in total. So that's why I sold the rest at $62.21. I had no clue that this was going to happen in the days that followed. But this is why we want to have multiple ways to exit our trades. And a very important one is danger signals. What other questions do you guys have? A little more than you bargained for on that answer, but hopefully you found it valuable. Let's see. Someone said that the posts have been very helpful. Good. I'm glad. I'm glad that you're finding the content valuable. Um, yeah, that share them, post them, um, leave comments. And that way it helps spread the information. If you're finding it helpful, then share it with somebody. Best Your best time frame for trading. That's a good question. Because there's no one best, but the way that you phrase it, you asked my best time frame for trading. So as you already know, I like to look at four different time frames: monthly, weekly, daily, and 30-minute. The time frame that I'm executing based on is really the daily. And the reason why is because I'm swing trading. So my intention when I'm buying any trade is to buy it, hold it overnight, and play it for a bigger move. So because I'm trading and holding overnight, I want the the daily time frame to be showing momentum. And I want to be able to use the daily because when the daily starts to turn, then that's going to be one of the signs that I'm going to exit the trade. When I'm initiating the trade, the 30-minute time frame becomes more important because I want to get surgical with my entry and how I'm going to place my stop. Because when I'm in that first part of the trade, I spoke about this in another live stream too. I look at it like chess. And when I first open the trade, that my first objective is to get risk off the table as soon as possible. What that's going to do is actually let me show you this. Let me show you this. Right? So if we are just going to do a little bit of drawing over here. So let's say that you have wins on this side, you have losses on this side. So let's say you get a win and then you get a loss, right? You're back at zero, right? If your win is over here, your loss is over there. But let's just say that instead of your loss being way over there, let's say that your loss was over here. Then let's say that you got another couple of losses. You would still have profit overall in your account. Why? You had three losses, but only one win. The reason why is because those losses are very small and this win is big. So the smaller your losses are, the less heavy lifting your wins have to do. That is super important. And the reason why you have to keep your losses small, that's one of the biggest parts of trading. One of the things that will help to raise your equity curve the most. Lots of things are involved as well, but that is a very important one. Let's see. Thanos, you're hitting up a lot of good questions in here. Your trading journal brief. Yeah, so I share my trading journal. Let me get a copy of my trading journal up and I'll show you what it looks like. I've shared this too. You may have seen this already, but my trading journal, I share my trading journal out with our members, right? So if you like this trading journal, you can have a copy of this trading journal. Now, my trading journal has grown over the years, right? So I'm tracking general market conditions. I'm tracking my open trades. Right now, I'm in cash. I closed my last trade yesterday. I'm actually going away for a few days. These are all my closed trades going back to 2020. All right. So this was the last one. I just closed out GCT and uh, notes on the trade. Last few winners in here, percentage gain and losses, all that stuff. Um, yeah, I share all these things, and I would be journaling in this way whether I had a service or if I didn't have a service. And the reason why is because it's important for us to track our stats. It's important for us to track our trades. How are we going to learn and improve if we are not constantly tracking what we're doing? Right? And how and what we track will evolve over time. That's one of the reasons why I really like spreadsheets for journaling, because when it's time for us to evolve, or when we do evolve, it's very easy to come over to any part of the spreadsheet and say insert a column and congratulations, you just evolved. Hey, like it's super simple. Let's see. Any other questions? We are almost out of time here. Entry confirmation, we spoke about that already. Here's a good one that we'll end off with. Where and how do you start drawing Fibonacci? With other words, where do you place the first lines? Okay, let's come over here and look at the charts again. Right, so get this out of here, get that out of the way. All right, so let's take a look at, uh, well, let's say that you were trading this right here, right? Whoops, tripod is just got a little wonky over here. Right, so let's say that you were trading this. Let's let's replay this. Right, so you're trading this area right here. The way that you would draw the Fibonacci extension and retracement, so you would grab the tool right over there, right? So now I've got the tool, and you would take it from the swing high to the swing low. So to anchor it in, if you're using TradingView, To anchor it, you could press Control, and then as you move your mouse, it'll just pull the crosshair to the top of the bar. You click, and then just drag down to the one that you want. In this case, we want it to be over here. And now I've got the Fibonacci extensions up here and retracements down here. And I will go and let's see, where's yeah, here it is. I will go and see which ones of these, which extension and retracement lines up with the price action. So if we click off 236, you could see that it's lining up pretty well with this area of resistance right in there. All right. So maybe I'll keep that one on. I'll close off some of the other ones here. Right. And yeah, probably won't use any of those. This one is pretty interesting, the Fibonacci 1618, because it's very close. Don't know if you can see it. There's some glare over here on my side of the screen, but it's pretty close to the $50 level. When fib levels line up with major psychological numbers, I like that a lot. And the reason why is because it's adding more confluence to that area. Right? So let's just say that we were going to look at this trade 30%. That's a bit much. But let's just say that we were doing that. Then and earnings is in a day at this point. So let's play it out and oh well, look at that. Right? So price just leapt and ran. I would not have taken that trade right ahead of earnings, but immediately after earnings, that would have been a great trade because this broke out after earnings. And you had very well defined a risk. Price was breaking above multiple layers of confluence right over here, breaking back above the 50-day moving average and the 21 period moving average. If we took a look at uh, this back here on the weekly time frame, price had already shaken out below the 10-week line. It was getting some resistance below the 10-week line. And so you were even able to use the prior week's high as uh, an area to get in. So several things were lining up on this. The Fibonacci retracement level, the prior week's high, the 10-week line, the 50-day moving average. So if price is able to bust above there, you had several factors that were in play, and it made it for an interesting trade. So, anyhow, that is it for today. I will be taking next week off. I'm going away with the family. So, I will see you in a little over a week. I hope that you have a great, great weekend. And I will see you back here, not next Monday, but the following Monday. Take care. Much love. Peace out, everybody.